Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, we're going to be talking a little bit about fake points of interest, fake order blocks, and all that sort of stuff, right? If you trade smart money, you've probably come across the issue before where you just see too many order blocks on too many time frames, right? Especially if you start flicking through time frames, you will see how confusing it can get when trying to spot points of interest and understanding what is actually structurally happening to potentially establish a bias for yourself, right? So we're going to be discussing a little bit of that confusion in this video, and I don't believe I will make this video too long, but I do hope it can provide some insight and really help you out in regards to picking the right points of interest and sort of having a systematic approach to the markets, right? Because it's really surprising to me how many people actually trade live accounts without having particular rules or a particular system that they're following, right? They're just simply looking at stuff very basically and saying, hey, I'm selling right now, I'm buying right now, I feel like it's going up. And really, that's why many people fail. You have to have a systematic approach, and really having a specific rules in order to determine potential points of interest that you're going to be waiting for, and that now you can sit back and wait for those, is going to help you a lot, because now you're no longer going to be FOMOing into positions where you shouldn't be doing it, right? Instead, you're going to be waiting for those areas, and you're going to be watching price as we hit those areas to then potentially execute positions, right? So if this sounds like something you want to learn today, make sure you stick through the entire video, because we're going to be discussing that idea. So traders, here we are once again, and we're going to be keeping this video very short and simple, right? I'm going to be giving you some ideas that you can potentially implement if that sounds like something that makes sense to you, right? I'm just telling you what I do and how I view the market. So don't forget, this is perspective based, right? So if we are discussing fake point of interest in order blocks, what you want to understand is that you want to be avoiding those that are sitting on liquidity. And this is pretty simple, but people still fall for the same trick over and over, right? If you have a market like this, let's say pushing up, now we come back down, and you see we created some sort of trendline liquidity over here, potentially double bottom liquidity, session liquidity, whatever it may be. Why are you still choosing an order block over here and expecting it to hold, right? Even though it may potentially make sense because you took some potential structure over here, you generally want to be avoiding this point of interest over here because it's sitting on liquidity. And if it's sitting on liquidity, you're probably going to have a lower one somewhere in this area that could then provide you the real shift and the real movements higher, right? So understand that, and we're going to be writing it over here. Avoid liquidity points of interest, meaning points of interest that are actually sitting on liquidity. Why would you want to trade that? You know that retail is potentially seeing this area as support or this area as resistance. So why would you bother with POIs over here when you know that if you take a buy at this point, you're following retail logic, and you're most probably going to get taken out into the real area where smart money is likely to buy into to then potentially continue higher, right? So understand that very well. It's pretty simple. Just simply avoid POIs that are sitting on liquidity, whether that be trendline liquidity, whether that is double bottom, session time liquidity. It really doesn't matter. Just avoid those POIs and have the patience to wait for those actual points of interest that are not sitting on liquidity, that do have imbalances on the way up, which signifies to you that banks actually introduced orders at those points, right? And they did it pretty fast. So that's why we have that imbalance that is going to get filled eventually, right? Because we understand that the market needs to be balanced out, meaning that we do need to have buy side and sell side liquidity being offered at both times in the market, right? So that is pretty much the first idea I wanted to discuss with you, which is avoid POIs that are sitting on liquidity, and we just went through that. So now we're going to continue with the next idea, which is also pretty important and can potentially help you out as well. So the next idea is pretty basic as well, and that is wait for discounted points of interest. Wait for those points of interest that are sitting on discounted areas, which means that now they have a high probability of holding, because you can create a story around why price may potentially be in this case, right? As price is trading lower, you can now say to yourself, hey, price is trading lower because it's seeking that discount price area that should continue the movement up, right? And on the way down, we are creating liquidity at this point, and we're grabbing it into our points of interest, and we're filling in balances once again. So that's why this point of interest becomes a much higher probability in comparison to this one over here, right? And let me actually take a second. Let's remove all that, and we're going to be writing out the second idea over here. Wait for discount OBs, right? And we're going to be sort of doing an example over here, pretty basic, right? Let's say we have a leg up, we have a leg down, we have a leg up, we have a potential bullish structure over here occurring, right? So as a general rule of thumb, once again, you want to wait for those discounted prices over here, which means you want to be waiting for those points of interest that are as close to the origin as possible, and avoiding those that are not at discount areas and can potentially be used once again to create liquidity over here. Maybe it gives you a reaction, breaks once again, people start getting into buys, right? And then we continue lower, because this is not a cheap price for smart money to start getting involved into more buy positions, right? Unless you're trading a high volume time, these points of interest that are not at discounted areas will probably not hold, right? We continue, the same thing occurs, right? We trade maybe into this one. This is sort of a better price for smart money, but still may not be enough. So we may still induce over here, create liquidity, move up, make people want to start buying, potentially fill some imbalances on the way up into a point of interest over here, to then just continue lower into the real area where smart money is actually happy to add more buy positions and continue with the overall trend that, as we can see over here, is clearly up, right? So this is an area where you want to be watching price, because it actually makes sense now that we could potentially be targeting this area, creating liquidity on the way out, down, filling in balances, and being efficient. Now we can take price higher and continue making money up. So that is pretty much it. It's pretty simple. Once again, avoid POIs that are sort of sitting on liquidity, and wait for those discounted areas that have order blocks in them, whatever you use as your points of interest, so that you can have a higher probability of your point of interest actually holding and providing good movements, right? So with all that being said, we're going to be quickly jumping right back into the charts and sort of taking a look at those ideas, right? Pretty quick and simple. So traders, we're back on the charts, and we're going to be taking a look at what I just explained to you previously and actually translating that information into candles over here, right? So as you can see, this is GJ on a 30-minute time frame. This is current price action, and you can clearly see how simple I keep my charts, right? I don't like to complicate it. I keep it very simple and basic. So we look over here, we can see that I do have some points of interest denoted at those areas over here. Reason being is because I'm applying what I actually explained to you, right? I'm avoiding POIs that are sitting on liquidity, and I'm waiting for higher discount prices in regards to where my points of interest are going to be sitting, right? So if we look at the first rule over here, we did have some sort of, we zoom in, we can see maybe even a lower time frame. We did had some sort of point of interest over here, right? This is potentially a order block for many of you that you were potentially watching today, and you potentially took a sell position over here, and you can see how quickly you got taken out. And that is because this point of interest over here is actually sitting on liquidity. Matter of fact, this is a Asia high liquidity, so you know with probability that is going to get taken out, hence why this point of interest over here fails, right? So the next time, instead of actually executing positions at liquidity areas, even though those liquidity areas have points of interest, you still want to be avoiding that, because it is probably not going to work out for you. So that is the first thing over here. Once again, pretty simple, right? If there is a point of interest that is sitting at liquidity, you want to be avoiding it. Just like over here, we could see that trendline liquidity was being built. You can see we get a reaction. Now you're potentially watching this area over here for buy positions, and you can see how quickly this fails and actually takes you out, right? So that's why you want to be avoiding points of interest at liquidity areas. So the other idea that we discussed was actually discount pricing, and we can see over here how I'm patiently waiting for those areas over here to be hit to then continue lower, because I know this is the leg that I'm playing with, and I understand that if smart money wants to continue selling, there is a probability that they want to drag it up here first to have a better area to sell, right, and better sell prices to then continue lower. But if that actually never happens, and once again, we're just sort of establishing a bias for ourselves, we never know with 100% guarantee, I also understand that we can potentially trade below this low in this area, and once we do that, this becomes my new leg, and I'm going to be waiting for the same thing, right? That sort of retracement into discounted areas over here to then continue lower, right? So understand that. Wait, really take the time and wait for those discounted areas. Now you will see how easy trading becomes, because you're no longer stressed out trying to guess which order block is going to hold, and you can see how confusing it gets, right? There's too many of them, especially once you flick through time frames, you will see how confusing it can get. So if you can create some rules for yourself and tell yourself, hey, I'm waiting for points of interest that are considered discounted areas so that I can have a higher probability of my order block actually holding. And that means that sometimes you will miss trades, but most of the times you will save yourself from executing bad positions, over trading, over risking, FOMOing into trades, because now you have a system, and now you can just wait for those areas to be hit and then execute your positions without actually having to worry about the different points of interest that you can see all across your chart. So that is going to be it, guys, for this video. And once again, if you're interested in joining the mentorship, you have the description, you will find the link over there. So if that sounds like something that's interesting to you, you can take a look into that. You can also message me privately on Telegram. I will try to get back to you as soon as possible in that regard. So with all that being said, I wish every single one of you good and profitable trading, and I will see you guys very soon.